Megan, it's great to see you. And again, the stock price reaction tells us investors don't seem overly concerned about this. Should other companies look to get the bad news out about their dollar exposure?
Yeah, I think that this has been somewhat expected. I mean, we knew that the dollar was up about 10% year over year. And when you think about currency headwinds, it's not only the magnitude, but it's also the speed with which the dollar appreciates or depreciates if it becomes a tailwind. Companies are able to hedge. You've covered all of the important highlights very, very well over the past few minutes in terms of the exposure to the tech sector. And I think it is really important to note that we did see the dollar peak in May. And we've done a historic level in terms of adjustment to Fed pricing. And I wouldn't expect the dollar strength to continue from here. So I think it's going to be more about the fundamentals, cash balances, the balance sheet, the low level of leverage for the tech sector broadly, and CapEx intentions from small businesses, which still remain healthy and are very important for the tech sector.
I see in my notes that among the sectors that you like or at least are looking at right now are U.S. small cap stocks. Seema just mentioned them as more insulated than large cap multinational companies against dollar fluctuation. Is that one of the theses that is behind your thoughts there?
Yeah, so we are still neutral to U.S. small cap, but I think it's an area that investors have to watch and look for in terms of picking their spots, because clearly one way to play the slowing economy and the recessionary risks is to pile into defensive sectors and defensive asset classes, but many of these are pretty bid up. When you look at asset classes like U.S. small cap, we've already had a huge correction. It goes back to the fourth quarter of last year. And valuations are very attractive relative to their own history and relative to the U.S. Now, one of the risks there is inflation, where smaller companies are less able to pass through those costs, as well as supply chains. But we do believe that inflationary pressures have peaked and are going to come down fairly rapidly over the next few months. And supply chain pressures are also showing signs of peaking.
That's nice news. Inflation has peaked in your view, and I see that you're not terribly worried about a recession in the near term. You do say, however, that you're cautious on the consumer. Why?
Yeah, well, one of the reasons why we think inflation is coming down is because we expect that consumer demand will slow. So if you're going to expect inflation to come down, I think we're going to have to see some weakness from the consumer. So we're more cautious there. We've already seen the personal savings rate drop below the 20-year average. Cash balances more broadly for consumers are still elevated, but if you look at lower income tiers, they're below pre-pandemic levels. So we are focusing on the pulls of the consumer, if you will. We still expect luxury to continue to do well. We expect discount, dollar store type of retail to continue to do well as supply chain pressures improve. Off-price retail is also very interesting, with a lot of these companies adjusting to consumer preferences shifting and being left with excess inventory. But that middle of the spectrum, when it comes to consumer spending, we are a little bit more cautious on.
Final comment on energy, Megan. That is a sector you still like?
We do. So it's clearly had quite a run, and valuations have adjusted from being extremely attractive to still attractive, but we've had a lot of price appreciation there. Our thesis is more long term, where we see the oil market still incredibly tight. We have China reopening, and we think that will continue, and we think that there's upward pressure there. Energy companies are still managing their balance sheets and capital discipline quite well. So when it comes to energy and materials, that is a sector that we still have an overweight to.
All right, Megan Shue, thanks for your time today. We appreciate it.